Welcome to our regular viewers and our new viewers. I'm Rebecca Powers here with Freeman Owen Jr. and the name of the show is Just Ask Freeman, because for many decades now, thousands of families have asked Freeman so many questions, and that, of course, part of your business, Financial Sources, Inc., is helping people map out their lives and, more importantly, specifically, their retirement. A lot of people wrote in and asked about, Freeman, could you please go over Social Security benefits, or what happens when I lose a spouse? Does that affect my retirement?
Yes, it does. The death of a spouse can lead to a decrease in retirement income that is available for that spouse after you've died or you've left this earth, okay? What we have to do, I'm going to share a few tips. Take a financial inventory. Look at the income sources that would be needed in the event of a premature death. One is, Rebecca, is understanding the pension benefits. Now, the surviving spouse sometimes will look forward to getting 25, 50, or either 75, even 100% of the deceased spouse's pension. Well, did you know, folks, there's a cost for receiving a certain percentage of your deceased spouse's pension? You have to pay for that.
To the government? To IRS?
Well, to your HRA, and in other words, your OPM. Let's take the federal system, OPM. Okay. They would have a survivor benefit for the living spouse in the event that the employee had passed. But I looked at it as a very expensive cost to the employee when he or she was living. Let me give you a good example. Let's say the living spouse decided to, I'm going to give my spouse, in the event of my premature death, 50% of my $100,000 or six-figure salary, 100K. I'll make it very simple. I want to make sure that she gets $50,000 per year in the event of my demise. Now, I'm going to estimate the cost of that survivor benefit.
Okay.
Are you ready for this?
Yes.
Suppose it costs anywhere between $300 and $500 per month to receive a survivor benefit, all right, in the event of your demise. Now, I'm going to multiply that, I'm going to make it very simple, by 12 months. And for brevity's sake and simplification, I'm going to make it, I'll assume, is $500 a month.
Okay.
500 times 12 months is $6,000 per year for a $50,000 survivor benefit. Now, again, it's hypothetical and it's an estimate. Let's say we pay this $6,000 for 20 years. That is $120,000 for survivor benefit, of which the spouse, of which we set this plan for, set up for, dies in 20 years and never have the opportunity to receive that $50,000 survivor benefit.
Okay, so what happens to it?
Well, you just paid out $120K. That's it.
Gotcha. So many little certain things we need to understand.
You need to understand what to do. We have to take a financial inventory of what sources and avoid mistakes. Now, the solution would be this. You could take the same $500 per month and utilize those funds and get what I mentioned on a previous show, an index universal life policy.
Yes.
Such that it provides 40, 50K in tax-free distribution over a specified number of years. So you can use those same funds or add a little bit more and receive tax-free distribution as a living benefit, since you are the insured and you set that up for your spouse. The death benefit is tax-free. You can utilize that type of product and planning for it. Now you got to make sure that what we do is plan so that those funds last, that $50,000 that you expect 10 years, 20 years, 30 years. And so we're more tax efficient in developing or having for you an index universal life so that, again, I repeat, tax-free distributions for you as the policyholder, and then the death benefit for your loved one, for your spouse, tax-free, and have these funds set up so that the monies are distributed over a specified period of time tax-free. Well, that sure beats providing or paying for a survivor benefit of a pension, $400, $500, some cases $1,000 a month, and those funds or that pension was never used by for the spouse that is supposed to survive. However, that spouse end up being deceased prior to the use of those funds. And you set up and you paid all that money all those years. So again,
being tax-free is amazing in the life insurance products. Exactly.
So you got to understand your pension benefits. Now let's talk about Social Security. Now, there is a survivor benefit for a spouse that is living, okay? If she or he is not working, all right, you can set up a benefit, and it's best to do it at full retirement age. And if you're born after 1960, your full retirement age is 67. What you do? The spouse, I should say, there's a spousal benefit and then there's a survivor benefit. Let me distinguish the difference. Now, in the spousal benefit, if the spouse is not working, they can get a 50% benefit from the working spouse, providing if you're at full retirement age. You got to be careful. Now, you don't want to do that at 62 or 59 and a half. You want to make sure that that you're eligible. So there's an eligibility age. Now, surviving spouse. In the event of demise of a spouse, and there's a surviving spouse that's looking forward to having the benefits that the working spouse had set up with the necessary quarters and so on at full retirement age, what can happen is that the surviving spouse, even if he or she was working and had a lower benefit, they have the opportunity to take, if the deceased spouse had a greater benefit, the surviving spouse can move right in and take that particular benefit, whichever is higher. So
that's good.
Yeah, we need to know, and that's why you need a Social Security report.
Yes.
You know, you really want to know how to receive the survivor versus spousal benefits. Just ask Freeman. Call us at 833-414-7233. And you know what I have for my clients? A Social Security report which outlines when to file, the eligibility age, maximizing your Social Security benefits, how to define the survivor versus spousal benefits. Folks, you just ask Freeman. Call us at 833-414-7233. Call us today, and I have for you your Social Security report so that you know the difference between spousal benefits, survivor benefits, when to file for Social Security. That's all part of the financial inventory.
Yes.
Okay. How to maximize your Social Security benefits, and so that you avoid costly mistakes when it comes to receiving these Social Security benefits, because the laws do change.
Very important. All right, stay with us. More with Freeman Owen Jr., and we are talking about your retirement. So many important things that he can do, and it all starts with a plan, and every single plan is different because it's all about you. We'll be right back.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter. The one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Welcome back to Just Ask Freeman. I'm Rebecca Powers here with Freeman Owen Jr., who has changed so many lives, so many families' lives by putting a written plan, by showing you everything you need to get toward and through a happy retirement. This show, we're kind of talking about financial inventory.
Yes.
Such great advice, sir. Let's talk about health insurance.
That's all part of it, too. We talked about your pension benefits. We discussed Social Security. What about health coverage? What if you're on a plan with you and your spouse share a medical health insurance? Folks, have you thought about what happens if you're on your spouse's plan and he or she dies?
Yes.
What you do then? Will you pay more premium?
Sure.
Will the health insurance company allow you to remain, or will you have to get your own individual health insurance? Just ask Freeman. Call us at 833-414-7233. That's all part of your financial inventory. This is very, very important. Something else, consider long-term care insurance. Folks, there's a 70% chance, if you're at age 65, that you'll need some type of long-term care. And let me define that. You'll need custodial care.
Right.
If you can't perform two activities of daily living we take for granted, feeding oneself, ambulating or walking, taking a bath, Alzheimer's, dementia. If two of these activities you cannot perform well, then you'll need some type of long-term care, or you'll need a caregiver.
Right.
Now, something too, I want to push this into the financial inventory. The reason I discuss this with clients, you don't want to be a burden on your children or your grandchildren or any of your family members. That's why, I've seen even my own parents as they aged into their 90s. They fought for their independence. They did not want to be a burden on me. And they weren't. Yeah. So I put a little emphasis on it. We'll have to consider long-term care insurance so that we take stock of the potential long-term benefits that are available. The average stay in a nursing home is around 2.9 years. You may not want to be in a nursing home. Mm-hmm. So long-term care, you have a caregiver that would come to your residence several days a week, maybe 24-hour care. So that's all part of taking a financial inventory. Again, understanding pension benefits, understanding your Social Security payouts, understanding your health care. Now we add long-term care. And then lastly, folks, I can't tell you understanding the uses of life insurance.
Yes, especially right now.
Especially right now.
Yes.
Let me share the difference of the term insurance and its uses versus the index UL. Now, I've been talking about that. There's index universal life in several segments of my show. Term. When you're a young couple, you have small children. You're just starting in your profession, husband and wife. And I want to sort of like teeter it this way. We've got husband and wife, and here's our family. The loss of income of one of the breadwinners can have the household, what they call
topsy-turvy.
Topsy-turvy.
Yeah.
So you need an insurance policy like term that replaces income, pay the home off, provide for your children's education is relatively cheap. So usually in your 20s, 30s, maybe early 40s, you want to protect your family this way. But what about retirees? Just ask Freeman. Call us at 833-414-7233. Schedule a complimentary consultation. Here's how we would use indexed universal life in the journey that you have, or your retirement journey. A lot of different uses. Number one, estate planning. Protect your IRA. We can take distributions to protect your loved one's distribution, which has to completely liquidate all tax qualified plans, including Roth IRAs, in 10 short years. Well, you have to pay for that distribution, the survivors. A good way to use that is evaluate the use of life insurance, index universal life.
Yeah.
Tax-free distribution. From an index UL, you can add monies to it. So these items that I mentioned, these tips, you would take a financial inventory. I want to repeat. Just ask Freeman now. Call us at 833-414-723 and get a complimentary consultation. And here's what we're going to get. We're going to understand your pension benefits. You're going to get a real good understanding of how to deal with your Social Security, when to file for it, how to maximize it, and how to avoid costly mistakes on the distributions. Notice there's a lot on distribution when it comes to your financial inventory. Check your health coverage. Will you be able to, in the event of the premature death of your spouse, can you continue to receive the health care benefits? Understand long-term care. That's why we have, even with, I mentioned this product, Index UL or the fixed index annuity, you can still have critical care as a hybrid with these products. Long-term care insurance is expensive.
It is.
Okay.
That's exactly what I was going to ask you. You've said that before, that it's very expensive, but you can put a rider on certain policies.
I can. And to have just a small fee with this rider to provide critical care, I think that's it's a great way to offset the expense. Private room, the nursing home is $109,000 a year.
Right.
That is huge.
And that's just the average.
That's the average.
And as you've said, healthcare is really even beating inflation as far as going faster, higher up than all others, kind of groceries or gas or any other service.
Healthcare. This is a critical moment as we move forward in the upcoming years. You're just going to need a little bit more of everything.
Right.
But with the income-producing assets that you have, and you deal with a financial inventory, you discuss with me, just ask Freeman. Call us at 833-414-7233. Get a tax-efficient report. Get your Social Security report so that you know when to file for it. And then we consider the fact that you can have long-term care or critical care. You can find out how to evaluate the different types of life insurance that is available to you. You need it even more in these days because the risk is taking off you and placed on the insurance company.
That's right.
That's why when we talked about market risk in your financial inventory, market risk is all on you. You lose X% of your lifetime savings. That's on you.
And you have no control.
No control.
So you want to take control. That's why we want you to call in. We're going to take a very short break. 833-414-7233 is the number to reach us. I'm Rebecca Powers here with Freeman Owen Jr., and we are mapping out your retirement. Anything you wonder about or need to know, just ask Freeman. We'll be right back.
Unexpected events can turn our world upside down overnight. They can cause volatility, shifts in the market, and may cause you to question the confidence in your current retirement plan. As a pre-retiree or retiree, knowing you have a plan that can withstand the worst economic conditions can help you sleep well at night. Contact us today for your complimentary review.
Welcome back to Just Ask Freeman. We're talking about mapping out your retirement to have really just peace of mind. That's the most important thing that all of us really, really crave. You like insurance products, and I want people to understand as an independent, you can look at every insurance company in the land and cherry pick, and you only use A-rated.
Yeah.
Explain why when interest rates are going up at the bank, so is the strength of insurance companies.
And also, if the interest rates are very, very low. See, I talked about the risk, removing the risk from you folks. I discuss these insurance type products because what it does, we have the claims paying ability and the rating of these various insurance companies such that you don't have to worry about your assets going into a deep dive. Now, there's some insurance companies offer variable products where there's movement.
And it varies, so you don't
does.
really like those as much, do you?
As a matter of fact, you've heard me say, I stay right in my lane, right there. The safety of my clients' assets is very, very important to me.
Yes.
The reason I say that is because I've used insurance products and strategically, not just here, buy.
Right.
We have to look at the growth of the underlying monies that in insurance products, the favorable tax treatment, which is one. But when you mention the fact that, Freeman, what about the claims paying ability of those insurance companies?
Right.
In the event that what happens if the insurance company bellies up? Well, there's state legislation that it protects not only the client, but also if the insurance company, of course,
Dissolves, which is very rare. Banks will close before insurance companies.
Very, 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 very rare. Because back in the Great Depression, a lot of folks utilized insurance products.
Really?
And their assets did not go away.
Wow.
Okay, I could name some famous people who did that, but I won't do it on the show here. But
yeah, no, that's a great point,
that's
though.
a great point. So
Protect, protect, protect.
Protect, protect. And that is, so we look for A+, A rating, at least no lower than a B+++.
Yeah.
The claims paying ability of that insurance company takes the risk off of you, and you can rest assured that your funds are nice and safe. And what you said was important when it came to interest rates. You don't get all of the interest rates with that underlying index, such as an S&P or a Barclays. Right. You get some of it. And that sum or that percentage that you receive, and we understand compound interest, and if you don't know, just ask Freeman. Call us at 833-414-7233, and we'll look at insurance products and look out for your best interest as part of your portfolio.
Exactly.
That's why I said now, if you have $250,000, 500,000 or $1 million, we can set apart a piece of that portfolio to safety and work in your best interest. And you want to know how? Just ask Freeman. Give me a call at 833-414-7233 and learn financial literacy, learn about your financial inventory, and have the peace of mind knowing that your assets are safe and you have an advisor that's going to look out for your best interest and not mine.
Exactly.
I adhere for the 10-year rule. That is one of the great rules, so that when my clients come in the office and sit down with me, daggone, Freeman's looking out for me.
Exactly.
That's right. And they'll say, well, I'm here. You asked me to just get in touch with you. My
I showed up.
You showed up, and you'll have a person that's looking out for your best interest.
Absolutely.
And can employ the various strategies that are available to us, and you didn't even know it. You want to know more about financial literacy, financial inventory, how to deal with your various types of insurances to make sure that your advisor is looking out for your best interest? Just ask Freeman. Call us at 833-414-7233.
And so often you've told me before that a lot of people, and you're like everyone else, so don't feel like, oh, I've procrastinated, I'm embarrassed, or what are they going to think? A lot of people show up with a POS, a pile of stuff. And that's okay. You're used to that, right? Just gather everything you can. And it might take 2 or 3 appointments to kind of map out their plan.
Exactly.
But your first question is, what is the retirement of your dreams? What does your retirement look like? Because it's like getting a tailored suit.
Exactly.
You're tailoring it specifically for them. Just 2 minutes left in the show, sir. What does that first appointment look and feel like so people know what to expect?
You just mentioned that folks come with a big pile of stuff. Well, let's take the opposite of that. You know how if you come there and I don't have anything to work with, you know what I say? I cannot work in a cloud. We're reaching, and that does not work. And when it comes to financial literacy and doing a plan for you, I would recommend on your first appointment that you bring your employer-sponsored retirement documents, like a TSP or 401k statements, 403B, I'm going to name quite a few, 457s, 401As, IRA documents, tax return if you have that, your statements from banks or credit unions, because we're going to sit there and review, and then we're going to come up with a strategy to make these monies function more, better, I should say, and to minimize taxation. Understand your Social Security. Don't forget your Social Security statement, because we're going to do a Social Security report. So it's not a big pile of stuff, but sometimes it's a little empty.
You'd rather more than less, is what you're saying.
More than less. And so what we'll do, but that doesn't happen often. Most of the time, the clients do bring what is needed.
Good.
That clock on the wall just runs right on through.
Because we have so much fun.
Exactly. We're having a great discussion here. So again, folks, I'd like you to tune in again. And, if you have questions, if you wish to have financial freedom, just ask Freeman. Ring us at 833-414-7233. Check with us on our next segment of Just Ask Freeman, and we'll help you with your financial literacy.
Absolutely.
Thank you again.
Thank you so much, and thank you at home. We hope you learned something today. We love you, and we'll see you again next time.